Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Monday, August 12th, 2019. Thank you all so much for coming. I appreciate you coming in, spending your time with me and investing your time with me, and hopefully if you watch this channel often, you're going to get some kind of return on your time investment. As you know, I prefer to make the majority of my buying and selling decisions during the last hour of the market. That is when the market makers and the large financial institutions take over the prices from the algorithms during the middle of the day. And I think they're the most valid prices to make my buying and selling decisions from. So we are having quite a day, everybody. The Dow is down a mere 409 points. The NASDAQ is down 111 and the S&P is down 39. So it's a pretty big down day today. Fortunately, we were pretty light going into today's session. It's never fun to have a red day in your account, but it is part of trading. And it is something that you have to get used to. You know, I've been doing this for 24 years, and of course I would rather have up days than down days. But honestly, I just go with the flow. They're part of trading. They're your cost of goods of trading. And, it's best not to get too emotional about it, put too much energy into it. They're going to happen. Just try to get on with your day, and you will have green days to come in the future. That is for sure. So let me see if everybody can hear me okay. Ornella Beto. Hi, how you doing, Ornella? Thank you for coming by. I appreciate it. I haven't seen your name before. If you guys wouldn't mind, if you can hear me okay, if you could just let me know before I get on with everything. All right, so listen, the plan for today is as usual. First thing we're going to do, we're going to run the U.S. legal disclaimer. It's about 40 seconds. After we come back from that, we're going to go through all of my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. After that, we're going to do just a little bit on trader psychology. As I mention every day, trader psychology is in my opinion, is the most important part of trading. Hitting a buy button, hitting a sell button is not that hard. It doesn't take a skill. Yes, you need to learn about the technicals, the technical setups and so forth. But after that, the difference between you becoming a long-term profitable trader or just a losing trader, to be honest, is how you're going to manage your positions, and therefore how you're going to manage your mental states. Are you going to get out of your positions? Are you going to have good money management? Are you going to position size correctly? Are you going to follow your plan? Are you going to do what you're supposed to do? Has to do with psychology. So that's why I always spend part of the day talking about trading psychology. Then what we're going to do is we're going to come back. We're going to go through all the stocks in my watch list. We're going to go through each one. We're going to look at the support and resistance levels. We're going to look at moving averages. We're going to look at RSI. We're going to look at MACD. We're going to look at ATR channels, and we're going to look for a confluence of signals. The best signals, in my opinion, come when you have multiple signals at the same time happening at the same time. That tells me that there are multiple groups of buyers, and that's how I look at things. I look at moving averages as groups of buyers. I look at RSI as possible groups of buyers. So I want to, and then looking at it in multiple time frames. Because people trade multiple time frames. So I want to look for a confluence of signals to let me know that there is a potential for a confluence of buyers coming in. Because if you're going to be long a stock, if you want the stock to go up, you want to be in the company of other buyers. You don't want to be in the company of other sellers when sellers are coming in. So, and then after that, after the market closes, if anybody has any questions whatsoever, please let me know. I'll do my best to answer them, clarify anything we talked about today, or if you'd like me to take a look at any particular stocks, I'm happy to give you my humble opinion. So, hey, JT is here. JT says loud and clear. Thank you, sir. I appreciate that. I hope you had a good weekend. It's nice to see you as always. Ornella says, I'm from Gabon in Africa. Oh, that's great. Thank you for coming by. I hope things are going well for you, and I appreciate you coming by. So, if you have any questions, Ornella, please let me know, okay? All right, so let's get the U.S. legal disclaimer out of the way, and I'll be back about 40 seconds. So hang tight, please. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. Well, listen, let's go through all of my current positions and we'll see what we're going to do with these going forward. So I did buy Amazon back on the 6th of August. And why did I buy it? Well, I bought it because the previous day we closed under the 250-day moving average. This is this line here. Next day we closed above the 250-day moving average. This is a good mechanical, back-tested, profitable approach to trading Amazon. I'm not trading this one 100% mechanically. I'm using the entry, the under the 250 and the over 250 as my entry, but I'm going to manage it discretionarily going forward. You know, some people will just go ahead and buy this over the 250 and then just keep it as long as it's over the 250. It's just very, very easy. But I like on stock trades because you have earnings 4 times a year. I don't like to hold through earnings. So I use the close back over the 250 as my entry, but then I manage it going forward. So we did hit a couple profit targets a few days ago, which is, you know, this is a perfect example of why I like profit to phase out of profit targets as it goes my way. Because, you know, not only did I lock in about 25% of the position up here in profitable areas, if it does reverse like it is today, it helps mitigate the shares that I have left that have gone against me. So today, it certainly looks like we're going to make a lower high and a lower low from Friday. Here's lower. It's a lower high than Friday's high. It's a lower low than Friday's low. That is my exit, is a close below the previous day's low. You can see it's stuck right at the 250-day, but even if it had closed above the 250-day and still had a lower high and a lower low, I still would have taken this off. So, you know, essentially this is going to be a bit of a scratch trade because I did have some good profits in here on the 25% that I locked in going up. This line here is my entry, and it does look like we're going to close below. So I will be selling this at the end of the day. You know, we're in the type of market right now where we had this big down move, we had a rally, and the people that bought down here, when it starts getting up here and starts to fail, stops moving up, the people that bought down here, they want to lock in those profits, and that's partially why we're having this sell-off here. Now, who knows what's going to happen? We might come down and make a lower low or test this 200 again, right? But if we are able to, even though we have the people that bought here selling here, that's moving it down. If it is strong enough now, even with those sellers, to move back up, like tomorrow perhaps create a V1 or V2, I would buy it again, because all the people that bought here sold here. Now all those sellers are gone. If we are able to move up, then we've been able to overcome those sellers. And when you have a whole group of sellers out of the equation, it's easier to move up. So I will be getting out of this today unless we have some miraculous recovery over Friday's low, but this is setting up for a nice V1 or V2 to the upside possibly. Here would be day 1, day 2. If we had a day 3 that moved up, I would go ahead and buy that. Alternatively, if we closed under the 250 day today, like it looks like we might, if we close back above, that is another reason for me to get in, because it's another new signal of closing under the 250 back over the 250. Alternatively, another area I would look to enter again would be down here at the 30 RSI or the 200-day moving average. So as it sits right here, it looks like we're going to close below Friday's low, and so I'm going to just take this trade off. Very close to a scratch trade, could be a positive trade because you know we phased out so far up here, and this was my entry, so we're only about 7 points below my entry, which isn't a lot on Amazon. So that's the plan with Amazon. Okay, DDM. DDM is very similar to Amazon in the fact that this is also a good back-tested approach off of the 250. We bought it here on the 6th of August. Previous day we closed under the 250. On the day that I bought it, we closed above the 250. This is another good, profitable, back-tested approach to trading the DDM, which is the Dow Jones Industrial. Now this one, compared to Amazon, this one is a mechanical trade because I don't have to worry about earnings because this is an index. So I will continue to hold DDM like a robot until either 1, it moves up, we phase out and run out of shares, or 2, we close below the 250, giving me a small loss. In the previous days, we did have a couple profit targets here, which is nice, but this line here, this is the 250. So if it closes under the 250, I'm going to go ahead, just lock in a small loss on this on this trade. You know, small losses are fine in trading, everybody. They're just part of it, and you can make money if you keep your losses small. But you know, if we buy here, sell here, that's a small loss. Let me just show you a previous trade. We took exactly the same, except for instead of the 250, it was the 200. This was back on the 6th of June. The previous day we closed under the 200, then we closed over the 200. Now, if we would have closed underneath the 200, I would have gone ahead, just take a small loss, like is possible on our current trade. But if it goes our way, we let it run, we phase out, sideways, phase out, phase out, phase out. And so you can see this was a beautiful trade we had here. We didn't know which way it was going to go, but we did have our signal. We had our back tested data, which shows that over time this is a good back tested approach under the 200, over the 200, and then we scaled out to here. So we let our profits run on this one. On this one, who knows what's going to happen? But again, if it closes below the 250, I'm going to go ahead and get out. If it continues to move up, I'll trade this like a robot. There's no discretion to this trade. And if it moves up, I will phase out until I'm out of shares or we close back below the 250. Frederick is here. Good to see you, Frederick. Hope you're doing well in France, my friend. Murat is here from Norway. How you doing, Murat? Good to see you. Gamer Squad 2, can you explain the V1, V2? Yes, I will. Let me wait till I get to a part where I have a good V1, V2, but Gamer Squad, in the description of this video, there are 4 links to my Google channel, to my YouTube channel, and one of those is titled V1s, V2s, and it's a specific video about how I trade V1s, V2s, and that video is dedicated to explaining V1s, V2s. So if it's just in the description of this video and all my videos, it's about an hour long, but I think you'll probably get the best information on the V1s, V2s if you watch that video. But when I see one here today, I will explain it. All right, Google. So, all right. Well, speaking of Gamer Squad, here you go. This is a V1. So I did buy Google back on the 7th of August. We had this big move up after earnings. We came back down. I was looking to see if we would find some support of these previous highs because this once was resistance. We moved up. This should act as support. It's exactly what happened. We moved down. We closed under the support. We moved up. The next day, we went below the previous low and closed above. So this is a V1, Gamer Squad. When you have one bar, the next bar goes under the low of the previous day and then closes above the close of the previous day. So this is a V1. Here's day one. Here is day two. Day two washes out or goes below day one by at least a quarter ATR and then closes back above. And in addition to that, the RSI was above 50 RSI. We closed back above the 20-day moving average. So we did enter here at 175.91. Next day, we had a big, huge move, immediately went our way. We did take about 25% of the profit of the position off as it moved up. Friday, we had an inside bar, but today it obviously looks like we're having a lower high than Friday's high. We're having a lower low, close below the low of Friday's low. We're back right about to where I bought it. So I will be exiting this trade today. And I believe this still will be a profitable trade because of the amount of shares that we got out on this big move. So I will be getting out of Google today. The only reason I might hold it is if we close above the 20-day. But right now we are definitely underneath. So anyway, that is Google. All right, so Johnson & Johnson's actually up today, which is good. But the reason I bought Johnson & Johnson is, and again, Gamer Squad, this, I just showed you a V1. This is a V2, where here is day one. Day two washes out day one. If this would have closed above day one, it would have become a V2, but it did not. But if a V1 doesn't form, you have the option of taking a V2 if you have the third day closing above day one's close. So here is day one. Day two, my puppy, sorry. Day two washes out day one. Then day three closes above day one. So I did enter Johnson & Johnson here at 131.61. It happened inside the ATR channels, which I like. MACD was positive. So I did buy it here at 131.68. The very next day, it did move nicely our way, hit one profit target. Today, is it making a lower high? It looks like. Is it making a lower low? No, it is not. So I am going to be keeping Johnson & Johnson, and my close or my stop on this one will be a loss of a close below the previous day's low. But you know, this is showing some good relative strength to actually be up on a day like this. All right, here is Merck. So I did buy Merck back here on the 31st of July. Why did I buy it? Well, we had earnings. Earnings went up, came back down, but held the support of that previous range. It held the support. We had a 520 crossover. MACD went positive, but which is all good, right? It's showing that it's holding support. But the main reason I bought it on this day was this day the market was down in a big way, but Merck was actually still up on the day. So I like the relative strength of the move. And as you can see, this has been a nice trade for us. Every time we've had a decent move up, we've scaled out, we scaled out, we scaled out, we scaled out. Today now, you know, I have to look at my trailing stop. Where am I going to get out with my trailing stop? Currently, I'm either going to get out if we have a close below the 5-day moving EMA, the exponential moving average, or a close below the previous day's low. So as it is right now, it's fine. Down a little bit today, but still holding pretty strong compared to the rest of the market. So Tomorrow, if we close below the 5-day and or we close below the previous day's low, I would go ahead and just lock in profits. But this has been a nice trade so far. All right. All right, so SPY. So as many of you know, I buy the SPY each day at the close and I sell it first thing in the morning. So why would I do that? It doesn't seem very technical. It doesn't seem like there's a lot of thought put into it with a lot of support resistance levels, and you are correct. But well, let me just show you quickly. So Friday, I bought this at 291.62. Today, I sold it at the open 289.90. So this was a losing trade, but let me show you why I do this. So this is based upon a study from Liz Ann Saunders at Bespoke Invest on Twitter. But you have two options. First, you could either buy the SPY at the open in the morning and sell it at the close in the afternoon every day. If you would have done this since 1993, you would have actually lost a negative 13.9% of your money doing that. However, if you do the opposite, which I do, which is buying the SPY at the close each day in the afternoon, selling it at the open in the morning the next day, if you would have done this approach, buy at the close, sell at the open, since 1993, you would have actually returned 634.2%. So, you know, there's a clear edge to doing this over time. This means that all of the performance in the S&P since 1993 has come in the after hours and the pre-market session, and then they have sold into the open. They've sold into the open with the overnight gains. But, you know, it's clear the blue line here is the buy in the afternoon, sell in the morning. Nice return. The buy in the morning, sell in the afternoon is the orange line. Nothing. So it clearly shows that the moves have come in overnight. And, you know, this clearly shows that you have an edge. And with any type of trading approach, you need to have an edge. What's an edge? An edge is an advantage. It means that, you know, when this particular setup happens out of 100 times, is it going to be profitable more than 50% of the time? If it is, then you have an edge. It doesn't mean any one particular trade is going to have an edge, but it means in the aggregate, when you take 100 trades, is there an edge there? And you can see there is an edge. It doesn't work every time. There's drawdowns, multi-year drawdowns, so it's important that you position size correctly. Don't put all your eggs in one basket, and, you know, position size to where you have enough where your position sizing small enough so that if you do run into a string of losses, it doesn't destabilize you, and it lets you let the edge play out for you in over the years in the long term. So, you know, there certainly is an edge with this approach. So I will be buying the SPY again at the end of the day, selling it again first thing tomorrow morning. All right. Hey, Dr. Jorgensen's here. Hey, buddy, what's going on? Dr. Jorgensen has been up fishing. Dr. Jorgensen says, this market data reminds me of some of my old lady friends. Ugly. Dr. Jorgensen says, pup is unhappy with the market also. Yes, my little puppy is unhappy with the market, as I think most people are, unless you are short. Good to hear from you, Bruce. Glad to see you're back in civilization. All right. Well, okay, listen, before we get on to going through my watch list and taking a look at each stock one by one, I do want to do a little bit of just a few minutes on trader psychology. This is from Stephen Goldstein at AlphaMind 101, one of the best Twitter channels out there. He's a trader performance coach, deals with psychology. I like to look at all of his tweets every day. I believe they're helpful, and I think they'll be helpful for you too. So Stephen Goldstein at AlphaMind 101. But what Stephen says is many traders set themselves up for failure before they even start. They expect to succeed quickly, to earn money early, to win because they are who they are. Trading is a skill. It takes years to learn and longer to master. And markets don't care about your IQ or degree. And everybody, it is so true. I see all of these advertisements for, you know, learn to trade, make tons of money, make 200% on your money. I mean, guys, it's not real. I mean, there's no free lunch in the market. In order for you to make huge returns, you have to take huge risks. And if you take huge risks, you have a very high likelihood of blowing up your account, right? And if you blow up your account, you're never going to become a success. You're never going to have the experience to be a good trader. It takes years to learn how to trade. It may look easy on the surface, but it might, it's like golf. Golf's not too hard when you first start. You hit the ball, but it takes years to master. And that is what trading is like. It takes years to master. And, most people, the majority of people that get into trading had some kind of success in business, right? They worked hard, they went through pain, they had high IQs, and then they get into trading and they can't figure out why they're not making money. And I can't remember who it was in Market Wizards. So, it said one of the biggest disadvantages to people is that they come in with an education. I mean, honestly, if you gave me a 20-year-old Marine that knew how to follow orders compared to a guy out of Harvard with an MBA, I would put my money on the Marine with no education all day long over the guy from Harvard with the MBA. Because, you start thinking you're smart, you start thinking the market's wrong, that you're right. The key with the market, everybody, is to not fight it, stick with your plan, don't get your ego involved, and yeah, that's what it takes to make money in this market, is just to have a plan, follow your plan, stay fluid, don't have this personality trait where it's important that you're always right, because if you're trying to always be right in the market, you're going to have a problem. You need to be open-minded and just let the market take you where it's going to take. So many traders set themselves up for failure before they even start. They expect to succeed quickly, to earn money early, to win, because that's who they are. Trading is a skill. It takes years to learn and longer to master, and markets don't care about your IQ or degree. So I thought that was helpful. And again, Stephen Goldstein at Alpha Mind 101. All right. Well, let's go through and see. Let's go through each stock and see what's going on. All right. Here is Apple. So a lot of these patterns you're going to see today are the same. We have this big sell-off. We have a rally. Now the rally is failing, which is okay, because now it's giving us an opportunity to look for some higher low V1 entries back to the long side. And one of my trading coaches, Kerry Lavorne, this is his favorite approach to trading, are higher lows, because you make a lower low, you rally, you sell off, because the people that bought at the bottom sold at the top, then you sell off. But then if the market's strong enough to move back up, you have all those sellers gone, which makes it easier to move up. I know some professional traders, they will not buy a V bottom whatsoever. They always wait for a higher low. So, bad news is we're down today, but good news is we're setting up in the future for some higher lows. So, Apple's holding in there pretty well today, considering, but what I'd really like to see tomorrow is I'd like to see a move down, wash out this 50-day moving average, move back up, trigger a V1. So that would be, tomorrow would wash out today's low and then close back above today's close. So nothing on Apple today. Adobe, same pattern. Move down. People that bought it here, they're happy it's moving up, but once they start seeing it kind of stall out, they want to lock in those profits, and that's probably what's causing a lot of our down move today. But again, it's setting us up for possible V1 or V2s to the upside, so nothing on Adobe. So silver, one of the only greens that I've seen today. You know, it's very high. It's up here at the third ATR channel. We do have a bearish double top with the bearish divergence, meaning that the previous high, you see how strong these bars are? That means the momentum was very strong. Then we had a pullback. Now we're higher than the previous high, but you see how the momentum, see how these bars are not as tall as the previous high on this move up? So this means that even though we're higher, we're starting to run out of momentum up in these areas, or the momentum is slowing. So this is actually a bearish potential setup. Doesn't mean to go ahead and short here, but just something to keep an eye on. But for me to get back into silver, few things happen. I need the 5-day EMA here to cross under the 20, close back over. That would be one entry point. Or we come back into the value zone, maybe hold the 50 RSI, look for a V1, V2. That would be my other approach. Recent trade we had, remember I just talked about the 5 going under the 20 and then back over. Well, that's what happened here. The 5 was under the 20, went back over here. This was a mechanical trade, and this was a wonderful trade for us. I scaled out all the way up to here. So that's what I'm looking for on silver. Well, Advanced Micro Devices had this big move up on news that it was going to be doing some business with Google and Twitter. Moved up strongly, moved up again. Today, however, certainly looks like we're going to close below yesterday's low. This is a V2 to the downside. Here's day 1. Day 2 washes out day 1 to the upside, and day 3 looks like it's closing below day 1's close. Does that mean I'm going to go ahead and short that? No, it doesn't, but I just want to give you an example of another V2, but instead of a bullish V2, this is a bearish V2. So nothing here on Advanced Micro Devices today, down 4.5% today. All right, Amazon, we talked about this. I did buy this back here at 1789.44 back on the 6th. We have moved up. We did scale out. It certainly looks like we're going to close below Friday's low. It looks like it's cashing some support of the 250-day, which is good. But I will be getting out of this today for sure. However, tomorrow, if we close under the 250, or today if we close under the 250 and then we go back above, then I will re-enter the position. All right, Boeing. Same pattern. Make the lower low, have the rally. The rally has failed, so again, we'll be looking for a V1 or a V2 to the upside. Alibaba. All right, Gamer Squad, this is an example right here of a V1. We move down, we move up. Yes, today's bar goes below the low of Friday's bar, and right now we're not quite above Friday's close, but if we did, that would be a V1. Would I take this here? Probably not. It wouldn't be the worst looking trade ever. This is on the weekly. We're to 38.92 RSI. We are back in the channel. You know, it's not particularly bad. I'm going to mark that and we'll see what happens. But this is a really nice V1. Here's day 1. Day 2 washes out day 1. If this closes substantially over day 1, that would be a valid V1. And also, what I also like about it, now that I look at it a little closer, is we washed out the third ATR channel and closing back above. So it is under the 200-day. If I do take it, it will only be a half position. But let me go ahead and just do the math on this quickly. Okay, all right. So we will watch this one. Caterpillar, 27.59 RSI. This has not really bounced with the rest of the market. You know, it would be valid signal if this closed above the 30 RSI today or in the previous coming days. If we close back above 30 RSI, but if you go under the 30 RSI, even intraday and then back above, it shows that the sellers, there were no more sellers that wanted to sell under the 30, but nothing on Caterpillar until it closes back above the 30. DDM we have, this is a mechanical trade. I'll be keeping this as long as it's over the 250-day moving average. Walt Disney, same pattern, lower low, had a couple days of rally. The people that bought in this area are most likely selling today. That's why this drove this down. We are setting up for a V2 possibly tomorrow. Here's day one. Day two washes out day one. If we could get a close back above day one's close and back in the value zone, that would be a decent location, but nothing on Disney. Another option on Disney would be to see if we test this 100 under and then back over, or a 30 RSI. Where's the 200? So I think the 30 would be down here. So, you know, another option would be a close under the 100 back over, ideally with the V1, V2, or a close under 30 or go under 30 either intraday or at the end of the day and then close back above. Max B says, someone said, I had PhD in math and physics. Thankfully, I was able to overcome that disadvantage and become a successful trader. Max, it's exactly the quote or what I was referencing when I said that earlier. Thank you for that. Yeah, think about that. I had a PhD in math and physics. Thankfully, I was able to overcome the disadvantage and become a successful trader. So that's just, that person understands he has high professional degrees and he knows that is a detriment to his trading success. I know it's hard to get your head around, but honestly, the more education you have, I think the worse you'll do in trading. That's why I'll take the Marine any day. Hey, Mount Doji's here. Good to see you, Mount Doji. Ramble Ron, hey buddy, good to see you. Nice. Thank you for coming by. Murat says, at Max B, that might be if I would consider myself a successful trader, though. Trading is more complicated than complex formulations. Yeah, I mean, to me, Murat, it's getting your ego out of the way, trading your plan, not thinking you're right. Honestly, that to me, that's what it takes to be a successful trader. All right, Etsy, same pattern, move down, rally back up. Now we've lost it again. Again, it's setting up for a good potential V2 tomorrow, which would be nice with the close under the 30 ATR channel and back over. Another option would be going under the 30 RSI and then back over the 30 RSI. Ford Motor Company, same thing. Lower low, move up. People that bought here, sold here. That's pushing it down. Potential for a V1, V2 tomorrow. Another option would be if we could get a buy down here with the 30 RSI at the same time we have a 200-day moving average at the 200-day moving average. That would be a pretty sweet spot there. Facebook did go under the 30, closed back above the 30. That was a valid entry point. Had a nice move up, tested the 50 RSI, lost it. So if I would have been long here, this is where I would have gotten out. So nothing on Facebook today. Five below, more of the same. We are at a 33 RSI. We're still inside of the channel here. Nothing really to buy here. If five below goes under the 30, closes back above 30, that would be an interesting point, but nothing today. Gold, very, very strong today. Extremely strong. Too high for me to buy here. I would need a 5 closing under the 20 or a move back into the value zone. I showed you earlier on silver, we used a 520 EMA cross that happened in the value zone. This is where we bought gold here. I phased out all the way up to here. So that was a nice trade. Now, if you would have traded this mechanically and not phased out, you would still be in this position with the 5 over the 20. You would still be in all the way to here, which would, you know, a super great trade. But this doesn't always happen. It's totally valid to trade something mechanically and just hold into it. The reason I don't like to do it is because you will give back a lot when it eventually closes below, but nothing on gold today. Google. We talked about this. We are long this. We bought this with the V1, moved up. Now, if this closes above the 20-day moving average, I would consider keeping this. Consider. I'll just have to see what happens, but most likely I'll be selling this at the end of the day. Goldman Sachs. Nothing on Goldman Sachs here. IBB has just been in this chop fest going sideways, down, up, sideways. There is a good back-tested approach on IBB, and that is when the 5-day crosses over the 30-day. That will be my entry signal on IBB. Eventually, because it will happen, the 5 will close above the 30, but it's not happening today, so nothing on IBB today. Intel. Boy, Intel has been really, really weak. Where would I be looking to buy Intel? We're at a 34.92 RSI. If we went below the 30, close back above the 30, that would be my first potential entry point, but nothing here. IWM. We had been in this trade based upon a crossover. We entered actually right here when we had a crossover. We got out of about 25%. Then it moved sideways, sideways, sideways. This was a mechanical trade. This was a robot trade. Went sideways, sideways, sideways. We did phase out as it moved up our way. Then and I only took a half position here because we were outside of the channel. We had had 2 strong days. Here is where I entered my second half of the position on this V2. Here's day 1. Here's day 2. Here's day 3. Day 2 washes out day 1. Day 3 closes above day 1. This was my entry, and you can see it was a great entry. Immediately went our way. We phased out a bunch here, phased out here, phased out here, phased out here. Then I only had about 30% left of my position. Then came the big waterfall, and I actually hit my emergency stop here. But luckily, it was only on 30% of my position because I got out of 70% of the position when the market gave me the profit. So I'm glad that I did that. But I always have an emergency stop, which is 5% below my entry. If it hits it even intraday, that is my exit. Moved sideways for a couple days, had that big strong close back above the 200, but that was a given back. So, you know, I will be looking to buy IWM if we get another 1050 cross. You can see the 10 is under the 50. If it closes back above, that will be another mechanical trade. Or, you know, tomorrow, if we move up and create a V2 over the 200-day moving average, this would be an interesting point for me here, because this would be a higher low V2 break back above the 200. Again, the people that bought here sold into here. If it's strong enough to move back up, even with all that selling pressure, then it will be able to move up easier, because the people that bought here sold here. Now all those sellers are out of the market. Johnson & Johnson, it is green on the day, thankfully. So until I get some kind of close below the previous day low, I'm going to keep that. Coca-Cola down a little bit today. Mount Doji, if you're listening, here we now have a lower high. So in order for me to get interested in a V1 or V2 at this point, because this is a lower high than up here, I would have to have this washed out before I would enter this trade. Lockheed Martin, Gamer Squad, here's another V2, day 1, day 2, day 3, day 2 washes out day 1, day 3 closes above day 1. Did not take this trade, but obviously this would have been a really nice trade, but nothing there. MasterCard, Nothing on MasterCard today. It has lost its 20 and the 10. Looks like it's lost its 50. RSI is holding here. We did buy MasterCard here when intraday we went under the 30 RSI, closed back above, tagged the 100, closed back above. This was a really great trade for us. We entered here. Close would have been a close below the 30, but you can see we scaled out, scaled out, scaled out, scaled out. Actually, right to the top, I ran out of shares here. So, you know, we have had a pullback for a couple days. We are still in the value zone. Ideally, what I'd like to see move here, I'd like to see this move sideways for a while, then have a nice V1, V2, but nothing on MasterCard today. Merck has rallied strongly, so it looks like we will be keeping Merck. Doesn't look like it's going to close under the previous day's low, so this has been a really nice trade for us. Microsoft. Again, the lower low, the rally, the failed rally, the move back down. I'd like to see this move sideways, have a nice V1, V2 back up into the channel. That would be the move on Microsoft. Netflix is interesting here, everybody, because we have a low, we have a rally, we make a lower low. It's not a bullish divergence because there's no green involved here, but the momentum did stall even though we went lower. See how deep these bars are? See how shallow these bars are even though we went lower? Then we had a move up. We moved back up into the range. We had a day sell-off. Today we triggered a V2. I'm sorry, a V1. Here is day one. Here is day two. Day two washes out day one, closes above day one. So we have a double bottom, slowing momentum. We have a rally. The people that bought here sold into here, went down, but now it's like an arm wrestling competition. The one participant got the arm to move down, but then the other participant, the bull participant, took back over, and this looks like a V1. So this does look like an interesting possibility today because of this higher low V1 after the double bottom with the slowing momentum. Where would my stop be on this? This would be the washout bar. So most likely, probably just if we close back into this new range, that would be my stop. So this is interesting for me today. It is up today on a very weak market, showing their strong relative strength. So this is interesting. It's under the 200 days, so I would only take a half position. Nike is holding in up pretty well considering us being down 400 points. I did buy Nike here when we had a confluence of the 30 RSI and we rejected the 200, but boom, I had to get out the next day on that horrible 1,000 down point intraday we had. I did not get back in, but it is holding the 200, so that is positive. Philip Morris, nothing really on Philip Morris. PayPal. Well, we are at a 29.14 RSI. If we could close above the 30 RSI, that would be a valid entry point, because right now we're under 30. If we could close back above 30, it would show that the market tested underneath the 30 RSI. There were no more sellers under there, or those sellers were overcome and it was able to close back above. So this is a potential. So let me just quickly do the math on this one. This is above the 200-day, so this would be a full position. All right, but this would be only if we closed above the 30 RSI. So we'll watch that at the end. The Q, same thing. We moved back down. Buyers bought here as it started to fail here and failed under the 50. They got out. This is what drove it back down. So nothing on the Qs. Snapchat, nothing there. S&P, will be buying that at the end of the day. Did take the overnight loss, but looks like we are going to get a better price than where we sold it. So that's good. Square. has rallied off the low, did touch the the sixth ATR channel. Whenever you get down into the sixth ATR channel, it's a bit of an extreme. You're pulling the rubber band pretty tight. I still wouldn't buy this because it's still under 30 RSI. Pro shares, that is the S&P 500 double leveraged. Bonds. So, you know, this is money going into safe haven assets. And so, you know, people are putting money in gold, they're putting money in bonds. There's a lot of fear out there, right? And that's why you're seeing these kind of products appreciate. Too high for me to buy up here. Tesla. Nothing really on Tesla today. Twitter. We've made a lower high. So in order for me to get involved in a V1, V2, Mount Doji, because of the lower high, I would need it to wash out the previous low before I would get involved in a V1 or a V2. Natural gas kind of moving sidewards. UNH moving sidewards, nothing there. Oil up a little bit today. I did buy oil here, and the reason that I bought it is we touched the 30 RSI. We also tested the previous low back here in June, and we reversed higher with the close above the open. So intraday we touched the 30 RSI, we reversed back up. We closed above the open, we closed into the channel, we tested that previous low, and you can see this was a nice 2-day trade for us. I did exit this on Friday up here when we rejected the 10-day and we rejected the negative, the downward sloping -1. So it is up a little bit higher than where I sold it, but still that was a nice trade. I was very happy with that. Dollar, you know, this is interesting. I'm just looking for a setup here. We had this nice move up. We come back down into the value zone. So, you know, this when you make a higher high, you come back into the value zone. This is one requirement. The second requirement is you have some sidewards movement. That is certainly happening. Now I'm looking for a V1 or a V2 to get me back into this trade. This is looking like a good setup, but I need a trigger. VIX, another big day today. It's too high for me to do anything with here today. We did buy VIX back here on the 25th of July when we had this nice V2. Here's day 1, day 2, day 3, day 2. Washes out day 1, day 3, closes above day 1. And you can see this is one of our biggest trades of the year. Just all the way up. I believe we got out right here. I believe we ran out of shares right about here. But that was a monster trade. That was a 14% gain from bottom to top. Verizon, nothing on Verizon. Walmart, boy, we're getting right down into this sweet spot where you're close to a 30 RSI and at the 100-day. This is usually a really good, sweet location to buy. It's a good risk to reward ratio. Unfortunately, we have earnings coming out. So there's really not much I can do with that, but it is a good confluence of low 30s at the same time you're at the 100 upward sloping 100-day moving average. So nothing on Walmart. Energy, nothing there. Financials, nothing there. Real estate, it's outside of the channel, nothing there. Utilities, nothing really there. Healthcare, nothing there. And pharmaceuticals, nothing there. So let's go back to the stocks that we flagged. Let's see, not Apple, not Amazon. All right, so the potentials for today are Alibaba. Looks like it is going to trigger a V1 here. Issue is on the 15th we have earnings. That's Thursday. is a higher low V1 back in there, but we do have earnings. Netflix, no earnings, and it's up today. That one, well, Alibaba was up also, but Netflix is up with a little bit of oomph here. We almost have a MACD bullish crossover. And then PayPal, let's look at the weekly on PayPal. Nothing really there. So I believe the only entry that I'm going to take today is a half position on Netflix. So let me get that queued up.
Order cancelled.
All right, that one won't let me do a market on close order. All right. All right. Dennis says, hey, Greg, what do you think of Netflix? Yeah, it's just looking at this right now. Netflix is probably the only thing that I'm going to buy today because of this higher low V1. And the relative strength of today's move is also positive. Brian 512, hey, good to see you, buddy. Thanks for coming by. All right, so let's quickly take a look at my current position. So Amazon does look like it's going to close below Friday's low, so that will be I will be exiting my position in Amazon. DDM still holding above the 250. That's mechanical trade. I will keep that. Google. So Google's the tough one here. Now it looks like it's going to be closing above. Yeah, I think I'm just going to go ahead and get rid of this. I mean, it's a coin flip here. It looks like it might be holding the 20-day moving average, but I had a nice move my way. It has come back down exactly to my entry point. I scaled out up here, so it still will be a profitable trade. In the current market right now, with the sentiment of the market, and these wild moves we're going to hit, I think I'm just going to call that a scratch trade with profitable trade, and look for something else. Johnson & Johnson is up. That's fine. Merck rallied nicely, so that's fine. So I will be buying SPY at the end of the day with the end of the day trade, and then Netflix. Oh, we only have 2 minutes. I better get moving.
Order filled.
All right, so there's Netflix.
Order partially filled.
311.21.
Order filled.
All right. So the market has recovered some. That's good. Like I said, we were pretty light today, which I'm grateful for. All right. So Amazon is going to sell at the... Amazon's going to sell at the close of the market. DDM we're holding. Google is going to sell at the end of the market. Johnson & Johnson we're holding. Merck is fine, and SPY. Going to be buying our regular SPY position. Yeah. So that is that. Yeah, I'm a little tempted on this Alibaba one here, but and I have earnings coming in. I mean, it's not a bad setup, but
order filled. Order cancelled.
288.07.
Order filled.
Is that where we got filled? Let's see. 288.07. Yeah, so that wasn't such a great fill. So the new entry on the SPY is 288.07. All right, and then Netflix, we got filled there at 311.21. All right, so we have DD. So Amazon is gone. DDM we have. Google is also gone. So what do you have? DDM, J&J luckily was up today. Merck had a nice comeback. Netflix and the SPY. So yeah, we are fairly light, and that is fine. You know, this market is it's pretty wild and volatile right now. So, you know, let's all be careful. So listen, if anybody has any questions about anything that I did today, please let me know. Don't be shy. Just type it into the live chat, and I'll do my best to help clarify or to give you my opinion. And but before we get to the answers, I just do want to let everybody know, like I do every day, that I do offer private one-on-one coaching and teaching lessons in the evening time via Skype. I've had really good success with my students. I've taken losing students, turned them into winning trading students, and you know, what we do here on the live stream I know is helpful. I've had a lot of people email me say that it's really improved their trading, the way they look at the market. But you know, having one-on-one lessons are actually better, and the main reason why is after I teach you, I have you teach it back to me, and that way I really know you've understood what I've said. So if that's of interest to you, my hourly rates are in the description of this video. My email is in the description of this video, or you can reach out to me on Twitter, and it usually just starts with a quick free phone call or Skype call. I just want to know more about you, how you got into trading, what your approach is, what the challenges you're having, what your goals are, and then I'll put together a custom lesson plan to you know, for us to work on for you to achieve your goals. And then if you like this video, please do me a favor. I'd really appreciate it if you'd hit the thumbs up button. It helps promote the channel through YouTube to more people. There's a lot of people out there that need help with their trading, money management, position size, all that kind of stuff. And I think if they find this channel and, you know, they watch it on a consistent basis, they'll start implementing those things into their own trading. So do me a favor, help me, help them, and hit the thumbs up button. So, all right, that is that. And let's see. Dr. Jorgensen says, have a good hike. Talk to you tonight. All right, buddy. Good to see you. I'm glad you had a good fishing trip and that you're back in civilization. Let's see. Dr. Jorgensen says, trading is better than crying babies. I would agree with that. I would agree with that for sure. All right. Does anybody have any questions or any comments, anything you'd like me to go over? Please let me know. Where did we end up here? 391 points down. Wow. Big down day, everybody. Big down day. You know, let's be careful out there, right? I mean, when the market gets this volatile, if you have a signal, take it. But if not, just sit on your hands, stay on the sidelines. You can make a lot of money by not trading, by not losing money, right? Mount Doji says, thoughts on ARGT? Okay. Well, I don't know what happened there, but that looks pretty nasty. I mean, it's a 2540 RSI, so, you know, based upon the way that I trade, I could not buy it there. You know, this bar looks pretty big, but keep in mind, Mount Doji, that this bar is actually this big because it closed Friday there. So there's a lot of selling, a lot of supply was coming into the market. There was a lot of distribution. You may have some kind of bounce. I understand that, but you know, I really think you're swimming uphill here if you feel like you're going to get some kind of rally, sustainable rally, because I believe it will get sold into. Let's look at the weekly. Yeah, huge volume, huge move. I don't know what happened there, but honestly, I would stay away from that. Max says, in my humble opinion, very often does opposite on Tuesday what it did on Monday. I have noticed that too. That's why they call it Turnaround Tuesday, Max. So hopefully we'll have a Turnaround Tuesday tomorrow. Murat says, just to make sure the color of your 5 and 20 EMA lines in the graph, dark blue is 20-day, cyan is 5-day. That's correct. That's correct. Here, I'll give you an easier. Oh, that's going to make it even more. Let's see. Yes. So the cyan here is the 5-day EMA. The 20-day is the dark blue line. So, you know, with gold, for instance, I have different color lines on my gold. But I'll tell you what I'm going to do here. Let's see. That's not even the right color. Yeah, you know, my charts have different colors, but yes, you are right. Basically, the cyan blue is the 5-day EMA and the 20 EMA is the dark blue. So if we bring it back over to this, one, oh, that's the one we just looked at, sorry. There we go. Yeah, so the cyan is the 5 EMA and the 20 is the dark blue EMA. Hey John, how you doing? John says Argentina elections. Yeah, that makes sense. I guess somebody won who they didn't expect, I would imagine. Frederick says, do you sometimes use the 250 crossover? Yes. I refer to it as the 50-200 crossover. Yes, that's a very good long-term back-tested approach. Now, remember, it's not really a trading approach. It's a long-term trend following. It's called the Golden Cross, Frederick. A lot of people use it on the S&P 500. You know, you can backtest, but it does backtest very well, but it's a long-term approach. And kind of what we were talking about before, Frederick, you know, when you're ready and you want to do some of these longer-term ones, the 5200 is actually one of the ones I was going to suggest to you. So looks like you found it yourself. That's good. Well, it should be an interesting week to see how this shakes out. You know, I mean, we could certainly just have a rally tomorrow, but we could have another dump tomorrow. So I'm glad that I'm light here. You know, I don't like taking on the stress of taking huge positions and worrying and having to look at futures all night long. You know, just take a reasonable position, but I'm pretty light here. I'm about 30% lighter than I normally am. So just a quick recap. So DDM, we're staying in this as long as it's above the 250. This is a mechanical trade. Johnson & Johnson is in the money, was up today. If we lose the 10-day tomorrow or lose the low of the previous day's lows, I'll go ahead and just lock that in. Merck was very strong at the end of the day. This has been a nice trade. Netflix, we took this higher low V1, but one of the main reasons I took it was because of the relative strength. And then the S&P. We bought that there at the end of the day. Murat says most stocks are 50% down in Argentina. Ugh. Problem with that is, Murat, is that, that kind of stuff spreads. Do you remember before December of 18, or the last quarter of 2018, everyone in the world markets were down, but we were up? And I actually thought to myself, it's like, how can everybody be down and we're up? And sure enough, we followed suit. So who knows? Frederick says, okay, I read this in Market Wizards. Good. Love that book. Murat says, I think if Fed doesn't do something sooner, it might be too late to do something. I agree. I mean, the market with these down days and volatility is telling the Fed that it wants its easy money binky right now for sure. I 100% agree, Murat. Ramble says, think we will have another bump tomorrow. Bump up or bump down, Ramble? I think he means up, but I just want to make sure. CMTL. Yes, it is, Mount Doji. Because we make a high, we come down. We had this V1. It did go our way, but it wasn't strong enough to keep going up. So, yes, technically you'd want to wash out this low right here. Dump down. Okay. There's a dump and there's a bump, Ramble. Bumps up, dumps down. Yeah, I don't disagree. I don't disagree. I mean, let's take a look at the volume today and see what kind of volume we had. Well, honestly, this is one bright spot. We did not have a lot of down volume. So that is positive. It didn't come on a lot of strength. So that is positive. But on the bright side, we are setting ourselves up for a lot of potential up moves with higher lows here. We have the low, we rally, we've come back down. But if we're strong enough now to go back up, that is positive. Murat says, I think the problem is that most people read a lot during the weekend and scared like hell. The first thing they want to do is sell all and buy gold. Yeah, I agree. That's a lot. That's one of the reasons, in my opinion, why you get two down days in a row. You get one down day, and the active traders and the professional traders see it and they get out. It makes the news. Dentists and other professionals that don't watch the market all day look at it read it that nighttime online, or they watch it on the news. That gets them scared, and then they sell the next day. That's you see that cycle, you see that pattern. You have up moves, you have a couple down days before you move back up, and in my opinion, that's why it happens. The active participants do it the first day. The second day is from people reading it and getting scared, selling the next morning. All right. All right. Well, listen, all we can do is trade our plan, stick to our process, adhere to our money management rules, position size correctly, and rinse and repeat, right? I mean, when you identify a pattern that has an edge, good. Identify it, determine your risk, put on your trade. It's either going to make money or it's going to lose money. And then you rinse and you repeat. Be patient, wait for your setups, wait for that pattern to appear with the edge. Determine your risk. Take the trade. It's going to win or it doesn't. That's, I was listening to Mark Douglas this weekend, Trading in the Zone, and that's basically how he sums up trading. Identify the pattern, identify your edge, determine your risk, put the trade on. It's either going to work or it doesn't. You don't have any control over it. Position size correctly so it doesn't, if you're wrong, it doesn't hurt you. But I keep talking about one of 1,000 trades. Each trade is just one of the next 1,000 trades. Don't put too much emotion into it. But I do want to tell you guys, make sure you are patient and wait for those setups, because that is a key component. Murat says, I use Saxo and they have very good news feed. I turn on my computer this morning and the first notification in the line was the following. Goldman Sachs analysts say U.S.-China trade war is leading towards a recession and do not see a deal before 2020 elections, while they expect tariffs on remaining $300 billion on China to go into effect. Yep. Yeah, it doesn't seem like we're going to have a trade deal. Who knows, though? It seemed like we were going to have one and we didn't have one, so maybe it will be the opposite, but I don't know. Max says, I am training to strictly follow market, not playing with predictions. My bias did me mostly harm so far. Oh, I'm glad to hear that, Max. It's the only way to trade. You have to come up with your plan, follow your rules, no matter what you think. You know how many times I thought we've been at a top? We weren't even close. When I first started trading, when anything would go high, I'd say, oh, it's time to short. I mean, what a mistake, right? I mean, I lost more money in the past trying to short rallies than about anything, because I thought the market wasn't showing me that what I thought was correct. So I'm glad to hear that. I'm going to read that again. I am training to strictly follow the market, not playing with predictions. My bias did me mostly harm so far. Yeah, that's why it's called price action trading. No opinions needed. You're just following the market. You're just following the price. Murat says, then I said we are almost at bottom. If Goldman Sachs guys are coming out with this kind of statements, that means we are soon to take off. Yeah. I don't disagree with you. If you were to overlay the news onto the market, at the tops you would see the most positive news, and at the bottoms you would see the most negative news. Murat says, I made a lot of money by doing exactly opposite of what Goldman Sachs guys say publicly. Yeah, I agree with you. I think with that kind of news, they're just trying to scare out the little guy at the very, very lowest prices. And when you have the best news, it makes the little guy want to get in because they don't want to miss out. But again, even if that's your belief, that if Goldman Sachs comes out that you should do the opposite, wait until the market shows you that it is moving up. Don't try to just anticipate it. Max says, funny thing, Goldman Sachs bumped their market target at 731 right before the crash. Yeah. These big funds, everybody, these big hedge funds, these large institutional, they have huge positions. They can't just hit a button and sell without affecting the price. So a lot of times they'll use positive news and big announcements to get out of their positions. They will sell into the strength. So that's why whenever we start getting up into the third ATR channel and really good news comes out and I see heavy volume, in my opinion, those guys have to sell into strength, and they're probably selling. All right, everybody. Well, listen, if there are no more questions, or final call for questions, but if there are no more questions, I'm going to go ahead, get up in the mountains, go for my hike. And I appreciate everybody coming by today. Max, thank you. It's always good to see you. Murat, thank you for your analysis and those comments. That's good information. Thank you, Murat. Ramble, it's good to see you, buddy. Mount Doji, good seeing you. Frederick from France, hello, and thank you. John Fredeus, thank you for coming by. I appreciate it. Dr. Jorgensen, good to have you back. Brian, 512, thanks for coming. Dennis Core, thank you for coming by. Hope to see you again. Did I miss anybody? Gamer Squad, watch that video in the description on the V1s, V2s. Let me know if you have any questions. JT, good to see you, my friend. Thanks for coming by. And Ornella from Africa, nice to have you here. Thank you for coming, and hope to see you again. And again, if you guys have any other questions, you're welcome to email them to me or send me a message on Twitter. Brian says, thanks, Greg. Have a good night. You too, my friend. All right. Well, we'll see what happens tomorrow. Hope everybody stayed safe today. All right. We'll talk to you tomorrow during the last hour of the market. Thanks, everybody. Bye-bye. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.